What is your call for next year?
Yeah. So our story for next year is a continuation of what this year has been, essentially, which is that we essentially got a kitchen sink in the first quarter. We made a significant, bear market low in April. That was the end of an economic cycle. I believe that there's now a rolling recovery. Okay, all the policy changes that we've seen really affect a much stronger 2026 from an economic standpoint. And a lot of that has to do around this investment cycle. So our target's 7,800. That's the base case for 2026. We've written about this as well. I think the very near term, we still have to get over this big hurdle, how the Fed is going to transition to being more dovish. Does that require weaker labor data, or does that require maybe more financial kind of stress in the funding markets? We'll see, what the catalyst is there. That could create some near-term opportunities, but we're a buyer of that dip if we get it.
Go back to the inflection point. What changed your view? Because now you're one of the biggest bulls on Wall Street.
Well, it's just flexibility. I mean, it's funny how you get a reputation. You go from biggest bull to biggest bear, and we've had that over the last 10 years, quite frankly. So it's not new for us. I mean, we're happy to go either way, depending on what our work shows. Most recently, in the last year, what's really changed for us is the earnings revisions, okay? So like this year, it looks much different. The earnings revision breadth is tremendous. I mean, that's the story, and I think that's the story that most people are still missing. And everybody's focused on valuation. It's like, look, valuations are okay if earnings are going to beat on the upside. And that's our call for 2026, is that we're seeing a broadening out in the earnings story. And we should see a broadening out in the equity story as a result of that. So we're very disciplined around our work. I mean, whether it's sentiment or positioning or, valuation or earnings revisions, I mean, we look at everything, Matt. And I think it's just, at this point in time, it looks pretty supportive from a policy standpoint, from an earnings revision standpoint, and in valuation, you grow into it.